Hello and welcome back to Nolan Financial Radio. My name is Chris McKinney from Nolan Financial Partners. If you'd like to hear more about us from our show today, you can give us a call. Call us at 719-210-4242, or you can visit us at our website, nolanfinancialpartners.com. Now, while at our website, check out our radio page, check out past shows. Uh, so you can listen to those on Apple Podcast, Spotify, Amazon Podcast, and Google Podcast. So don't hesitate to reach out to us with any questions or set up a face-to-face or a virtual meeting. So when it comes to crafting a financial strategy that sets you on a course to reach the retirement that you work so hard for, it can be easy to hyper focus on the big things: income streams, legacy plan, where you want to live after you're not going to work anymore. These are all big and important planning elements. However, like so many other parts of life, it's often the little things that make the biggest difference. Reviewing your 401k allocation, changing your beneficiaries as needed, and even reviewing your subscriptions are all small things that can add up to a very big deal. So, on our show today, we're going to shine the spotlight on some of these smaller things, but no less important planning steps. But before we dig into those details, let me introduce you to my co host, Tony Shore, who never misses the details, big or small.
Oh, I don't know about that. Little facts stick with us over the years, and I don't know about that. Nice compliment, though, Chris. I appreciate it. So, I've been good. Thanks for having me on the show. This is going to
Yeah.
be a good one. You've got a good topic. I mean, obviously, there's a lot of importance to planning, financial planning, and retirement planning, and we talk about that a lot on the shows. But we're going to dig in on some of the really critical steps that you need to be aware of that maybe some of our listeners out there aren't. And this is going to be a great one. And I was thinking about a Da Vinci quote that I
Oh,
really,
yeah.
really like, and I want to make sure I get this right. He said, "Details make perfection, and perfection is not a detail."
Oh,
So I thought that was an interesting quote. I really, that's a good one. I always like that. Da Vinci was kind of crazy, but that was a good one. But Chris, how have you been? What are you doing there? You're not busy at all, are you? With Tara being gone
oh,
right now, and
I'm super busy because not only do I meet with clients, after I meet with them, then I have to do all the paperwork. And so the paperwork is starting to stack up on me a little bit. So that is going to be my next task after we do the radio show is digging into paperwork. I've been working Saturdays and Sundays uh, doing paperwork. It's just an incredibly amount of paperwork for everything we do.
wow, yeah, I absolutely hate paperwork myself, and that's the not so fun part of the job. And I know you love meeting with people and talking with people and being able
Yes,
to help them, but the behind the scenes stuff is a lot of work. It's a lot of work. So,
it is a
and
lot of
I
work.
yeah, and I know you're very particular. We're talking about details, and you're a detailed oriented guy. So, right?
So yeah, so if I'm so I'm like I'm working typically through my first set of papers I'm working for somebody is only about 5 pages, but that may take me 45 minutes because I got to verify all the details on that paperwork against the other places where the information is. So I got to make sure everything's lined up. Everything's got to be letter perfect. Talking about perfection, everything has to be letter perfect on most of these documents. Otherwise, they send it back and I have to do it again, and nobody wants to do paperwork again.
Well, yeah, that's true. Yeah. You don't wanna never have to do things twice. That's why
No,
you wanna do it right the first time. Always do it right the first time. That's what my teachers always told me. So you don't have to do it twice.
that's right. So
Yeah.
let's get into our topic for today. And so the first thing we're going to talk about is FDIC coverage on your accounts. So I usually go over these with our clients when we first meet, but by the time they retire, they often forget what they are, and they may change, right? Because they change over time.
Yeah.
So your cash in your accounts in your bank, and with other things can change. So right now, the FDIC coverage limit for money that's in an individual account in a bank is 250,000. Now it's 500,000 for a joint account. So you may have thought about this, where your bank has placed and its member FDIC sticker on the front door. Um, you just got to remember that it's there. You need to know what it is, and then if you have too much money in there, maybe you need to do something about that. Right? You don't want to have a sizable pile of cash that somehow a bank runs a problem and then the money's not there.
Yeah. No, that's true. And obviously, people, I think, might have too much in their bank accounts in certain circumstances anyway.
Right.
And I don't know why you would have that much in a bank account, because you're losing out on growth. And I can actually picture the spot on my bank's door where they have that member FDIC sticker. All the banks
Sure.
have, yeah, on the windows and doors. But I know many members of many banks are obviously a part of that, but people
That's
need
right.
to realize that, also insurance companies have, there are ways to insure those types of products. They have
That's right.
insurance backing up their ability to pay claims. So, I think the limits are about the same. So, there aren't a lot of advantages of keeping that sizable pile of cash in a bank, right? I
No,
mean,
there's not, and the only time that usually you get that is maybe when you're selling a house or something,
yeah,
but you should get that moved into an investment, quickly, or into, another avenue of how to keep your money. So, like for, insurance products, the state insures those, and so it can be anywhere from, uh 250 up to 600,000 depending on how your particular state works. So it's good to review those and then make sure that the things are covered in case there's an issue. Uh, Insurance companies don't got a business, so those bonds that are held at states really don't come into play too much. Now that brings up my next topic, which is reviewing your beneficiaries. So you need to make sure that you review your beneficiaries for all of your accounts. So there's beneficiaries on life insurance policies. There's beneficiaries for IRAs and Roths normally, and you can usually name a beneficiary for an individual account if you want to. There's usually an additional form for that. They don't make you do that for those, but
right.
you can ask for that. Now,
Hmm.
I've just met with a client recently, and he has a trust, and so needs to make sure that he's got his trust named as a beneficiary, so that all his druthers, once he passes, occur inside that trust, and his desires happen after he passes. So it's a good idea to make sure you have all those things done, and that's the one of the biggest things is some people they build trust and then they don't get their accounts uh, correctly uh, titled so that it goes into their trust when they pass.
Right. Well, beneficiary, you mentioned beneficiary designations. That's huge. Obviously, you don't want to
Yeah.
mess that up. And you want to make sure that your loved ones are taken care of, and it goes to the right people where you want it to go, where it needs to go. And so having all those I's dotted and T's crossed is good. And I'm glad we need to talk about the importance here of working with somebody like yourself, you and Tara, Chris, because obviously you want to work with a financial services professional and review your overall financial strategy, including your named beneficiaries. That's a good thing. I've heard horror stories about people
Oh
leaving
man,
the insurance payout goes to an ex-spouse that they haven't been known or talked to in 20 years rather than their current family, things like that. Right?
yeah, it's happened to us. Yeah, it happened to one of
Yeah.
our clients. Yeah.
Yeah, that's not good. So, and I know that's why they turn to you and say, make sure that does not happen, and you help your clients with that. So I think that's huge. And work with a trusted financial services professionals, and review everything, because you're positioned to offer fresh insight, and you know what to look for, and you can offer that valuable second opinion if our listeners have questions or want you to look at that. And I think they all should, because we all need to make sure. When I first heard that, and Tara first told me about that years ago, I checked all mine, and fortunately they were pretty up to date. But as your kids get older and become adults, then you got to change things around again, you know.
That's right. Sometimes your kids remarry, sometimes your kids have kids, sometimes you have additional kids you didn't expect, because
Yeah, yeah,
they remarry, and then now
yeah,
you've got additional grandkids that you can
sure,
have fun with, and you might want to include them with some of these funds. So you really
sure.
need to stay on top of your beneficiaries. So the next thing that we want to talk about today is your 401 allocation. So it's a big financial strategy step that often gets overlooked. You need to make sure that if you're changing employer, you've got your new 401k going, or if you have an old 401k, what's going on with that?
Yeah,
Who's watching it? Where is it? Hopefully, you've talked to your professional uh, financial person so that they can get control of that and help you set financial strategies and goals for that money that you can achieve those targets, right? You have to have targets to be able to hit something, right?
right.
Uh,
You have to
so you,
have the goals and the targets set on those funds. And
that's
I'll tell
right.
you, a lot of people don't know what's in their 401k. They don't pay any attention. And really, it's good to review that and
That's
make sure
right.
you're contributing enough for your match. You've always told us that, Chris. And the 401ks are huge. And the majority of our listeners probably have 401ks or had them. So,
That's right. And then circling back, they have beneficiaries associated with those. So those should be named as well.
yeah. Oh, yeah, true. There is beneficiary designations on those accounts. Review those as well, as we mentioned before. And the first time, Chris, I ever enrolled in a 401k, I just thought, hey, I enrolled. Look, I'm already saving money. This is awesome. And that's all I did, right? I was naive. I thought that's all I needed to do, set it and forget it. And that's what a lot of people do with 401ks. But
That's
I've
right.
learned over time and from you and Tara that at a minimum, you need to check the important parts of your 401k. Go to a financial services professional like yourself, someone you can trust, to look at where you're at and how you're designated there versus other accounts you might have. You might be doubling up and canceling out. So you need to have a strategy for growth,
That's
and
right.
just setting it isn't good. And you don't want to miss out on the match. I mean, we've talked about the importance of contributing enough to your employer sponsored plan, whether it's a 401k, 403b, that type of thing, to get the match. I think that's really important.
It's really important. I ran into a client recently that they're getting a 10% match, which I've never
Wow.
heard of something that high. But
No,
that
6%'s the highest I've ever heard.
highest I've ever heard is 6. He's getting
Yeah.
10%. I was like,
Wow.
that's
That's a
all.
great
That's
benefit.
so awesome. Yeah.
Uh-huh. Must be a
And
good company. They
it's
must have money.
it's a really good company.
Yeah.
Well, this is the same client that I mentioned has a trust, right? And so
Mhm.
the reason he has a trust or maybe a guardianship is because he has minors in his life that he wants to kind of manage how they get money,
Yeah.
and so that he doesn't have to trust who's ever looking after those kids
Mhm.
in the future, and whatever assets they inherit from him, he wants to have a say in how they go past his life. And
Yeah.
so you want to make sure if there are some minors that you want to take care of, that you have the right things in place, that they get what you want them to get.
Right. Yeah, that's huge. And that's yeah, another good reason to have a trust right there. So,
Right.
what's the next recommendation you have for us?
So the next recommendation we have, so we talked about the FDIC, we talked about 401k.
Yep.
The next things we want to look at is maximizing how much you're earning on your cash. Okay.
Ah, yeah,
So right now, interest rates are going up, right? So you
right.
want to take full advantage of any cash that you have that's sitting around. So we usually have an emergency fund that we keep in a bank so we can ready access. Well, savings accounts might be starting to pay a little bit, so you should check out
Yeah,
what's going on currently with savings accounts. Maybe there's another institution, a different bank that might actually be having a return that makes sense for you to switch banks with that
sure.
large nest egg,
Or
right?
more importantly, don't have so much in your bank that you're missing out on growth because even with some savings accounts now paying, even if it's paying over, between 1 and 2%, that's still not that's almost nothing. So you need to um really look at other options other than banks. And I know you and Tara have there's a lot of different vehicles, a lot of different options out
Right.
there. You're not saying telling people to put everything in the market or
No,
everything in a maybe a MIGA or a fixed indexed product, but you want to have a balance. You need a good emergency fund in the bank that you can
that,
access, but
that's right.
beyond that, you also need other things for growth. And there are things out there where you can get principal protection just like you would at a bank, yet experience maybe some more growth. And I know,
Yeah.
uh,
You
MIGAs,
brought
things like that.
You brought up MIGAs, yeah, and right now the MIGAs are paying really well.
Yeah, they
So
are.
the companies that offer those are really looking for people to get money from them, and so they're paying really well. Uh, the uh, the rate that or the amount of time you have to leave them in there is shorter than you might expect.
Yeah, because
So
you
it's a,
could get a 3-year MIGA, right,
that's
with
right.
pretty
That's
good
right.
rates, and then we can't talk about specific rates because they vary from
They
it
change
can
too
vary,
much.
but you can lock in a pretty good rate,
They, the,
on a
the,
MIGA right now, and
that's
they've
right.
made some really good deals, and again, that's usually offered by an insurance company, that is insured themselves. The money is insured that you have in there, and I know you and Tara look at all the options from all the companies to get the best rates with the A-rated
That's
companies
right.
who aren't going anywhere. And so that money and your principal, that's all guaranteed by the claims paying ability of that issuing company. And so it does work somewhat like a bank, but it is different. So you have to understand it's not the federal government. That's the only difference.
That's
And
right.
it's a private company. But other than that, it's really like having a CD that actually pays decent, which
Exactly what it's
certificates
like.
of deposit and banks aren't paying decent still. I mean,
No,
they've crept up a half a point, maybe, but it's
yeah.
just not enough. Or
You can get 5 to 10 times in a MIGA what you can get in a CD right now.
yeah, yeah,
Yeah.
it is amazing. So those are I know those are popular right now, and for people who are realizing it. So I think if our listeners have questions about that, they should pick up the phone and give you a call. Why don't you give your website and phone number?
Yeah, that phone number to call is 719-210-4242. We're offering a complimentary consultation, so please give us a call off the radio show, mention the radio show, and you can get that complimentary consultation.
Yeah,
Visit
and
us
then
at
again, yeah,
yeah,
let's give that number again, 719-210-4242. 719-210-4242 for our radio listeners who can't see the phone number scrolling. If you have any questions, and you're offering a complimentary consultation, right?
that's right. And so just mention the radio show when you call in, and we'll set up that complimentary consultation, whether it be in person or virtual, however you want to do it. We can make that happen.
All right. And what's the website? I know they can go to the radio show page to listen to past shows, subscribe to the show as a podcast, and there's a lot of great info on there as well. There's contact forms through the website if you're driving and can't remember that number.
That's right. Contact us through our website. Find out or listen to our old podcast. It's nolanfinancialpartners.com. Go out there and check it out. It's a really pretty website. We're pretty kind of proud of the colors and
It's a great looking website and
yeah.
easy to use. Yeah, much
Yeah.
better than her first one.
Oh, yeah, that's true.
Yeah, that
Because
when you guys first started, yeah. Yeah, it was a DIY website, and now
it
it's
was.
very professional. It's very good.
Thank you.
Nolan Financial Partners.com. So
You say
check
it
that
so
out.
well, Tony.
Nolan Financial Partners.com. Let's hit the modulation, right?
That's
Yeah,
right.
yeah. For the kids. That's why I do what I do, Chris. I
That's
do it
right.
for the kids. Yeah. So, where are we going next? We talked about, you know, where you want your cash, and we've discussed, don't disregard different options out there like MIGAs. Don't be afraid to think a little differently and ask these questions. So, what's next?
So what's next on my list is IRA distributions and inherited IRA distributions. And so both of these financial pieces have to be managed very carefully as we get into retirement because there's a lot of rules around them. You can pay very, very unpleasant 50% tax
Ooh,
penalty if you do not take your distributions correctly the way you're supposed to. So that's something really want to pay attention to. Myself and then the organizations that we use that back us up will help you do that. Okay, so we always talk to all of our clients that are have required distributions and make sure that they get those done each year. So you got to make sure you meet with whoever your custodian is or financial services professional and make sure that you're getting those distributions done correctly.
yeah. Yeah, one of the most consistent themes on this show is touting the value, obviously, of working with somebody like yourself, a financial
Right.
services professional. And in my opinion, making sure that you're properly handling those IRA distributions is one of the best reasons to do it. I mean, the idea of a 50% tax penalty, ouch. That makes my blood run cold. That's
Oh,
what that does.
oh yeah. I make it a point to review those distribution strategies with our clients on a regular basis.
Yeah.
We will often set up uh, regular payments with our clients so that they don't have to worry about it anymore. And then we still review that the client meets the the distribution rules, right? We need to
Right.
keep track of that. Um, and then there's another thing that people don't always remember is that HSA um, are also um, a financial instrument that you need to track what that's doing, what the limitations are of those, when your healthcare expenses are occurring. So if they're incurred and you're get reimbursed and you're doing those things, so make sure that you're tracking your HSA. If your HSA has a financial element where it can be invested, make sure that that's invested the way you want it.
Yeah. Yeah.
So there's a lot of things with HSAs that people don't think about, but HSAs can be a critical part of your financial review.
Yeah, I mean, HSAs have become quite popular because you can get. I think it goes in tax free. You don't have to pay taxes on that money as long as you use it for eligible items. And there are things people wouldn't realize that are eligible under HSAs, right? I mean, there's a
Yeah,
lot of different stuff.
there's a lot of things like long-term care premiums,
Oh wow,
feminine products, sanitizing
wow,
wipes, sunblock, maybe.
sunblock,
It's
sunblock.
you got to have it
Yeah,
for your health.
I've said it before. I'll say it again, Chris. Always wear sunscreen, right?
Oh yeah,
Right? The commencement, when they asked me to give the commencement address, as you know, I've been asked by
oh,
many universities.
that's awesome.
No, I'm kidding. I just get up there and say, and most importantly, always wear sunscreen. Right?
Yes.
That's the key to life right there. I mean, the answer to life is 42. We know that.
Oh yes.
But one of the keys to life is sunscreen. But I would never have in a million years guessed that sunblock was HSA eligible. That's funny. So see, there you go. You can
There you go.
save money on things like sunscreen because you can buy it tax free with that. You don't have
That's
to pay
right.
taxes on the money you buy it with. So that's really good. So what's next?
So the next thing is something that gets into maybe some work for you. So you should review your credit cards, and you should regularly review the credit cards, debit cards, and subscriptions for everything that you have for any fraudulent activity. So that is a lot of work, but you should really do that. You should know what you're spending, and you should know that you can create an alert on your smartphone if your credit card gets hit with an expense that's something out of bounds. You can get a heads up on it. I have it so that anytime a couple of my credit cards, they'll send me a notice anytime anything is charged, so I know it. So if
That's nice.
Tara's out spending a bunch of money, I find out.
You had to throw her under the bus because she's not here. She's
That's
not
right.
here. Right. Yeah.
So, like Apple Pay and Google Pay, some other phone apps can help you with that.
Yeah,
So,
that's
look
helpful.
around and look for help that you can automate those things, so you don't have to be digging through those statements each month,
Yeah.
right? There's ways to automate that, so
Yeah, I
they can
use
help you
alerts
out.
myself. I think that's
Yeah,
really important, and it's nice to have a little financial backup. It's easy to set up, but
yeah.
it's no replacement. Though you also need to be working with somebody like yourself. So, what's one more quick thing you have before we go?
So the this is the big thing, and something we always talk about with our clients early on in our financial plan is purchasing a life insurance policy. So this is an important financial strategy step, because if you have loved ones that you know would be hit financially hard in the event of your death, you want to make sure you have a life insurance policy that could alleviate some of that stress. Maybe it's just a death policy that covers, your burial, right? Burials are expensive now. It can be upwards of $30,000. So you want to make
Wow.
sure that that expense is not passed on to your loved ones. So maybe it's your mortgage, right? You don't want those things to be passed on to your family. Any other essential family expenses that happen, or any kind of loans, or you want to have some coverage that covers all those things. And then the other part about that life insurance, it can also cover some loss of the retirement funds via either Social Security or a pension that you would stand to lose, your partner stands to lose. So they can really help your partner get past some of that trial of losing your income.
Yeah. Yeah, there you go. Well, you know what? It's been a great show, but we're out of time, Chris. One
Oh,
more time, give that contact information for our listeners.
so give us a call at 719-210-4242. That's 719-4242. Or visit us at our website, dolanfinancialpartners.com. Check us out. Subscribe to our channel on Apple Podcasts, Spotify, Google Podcast, and Amazon Podcast.
All right. And that does it for today's episode of Nolan Financial Radio with our host, Chris McKinney.
Join us again soon for another episode of Nolan Financial Radio.